I still remember the very first day I stepped into the world of financial markets. Back then, to me, it wasn't just an investment field. It felt like a gateway that opened the path to freedom, wealth, and recognition. I imagined that all it would take was sitting in front of a computer, watching red and green charts move, clicking a few buttons, and money would automatically flow into my account. At a young age, with a burning desire to get rich quickly and easily, I was pulled in blindly. I had no idea that I had just entered a ruthless battlefield where millions of people were fighting for every opportunity and where the unprepared would be wiped out in no time. That day, I opened an account with a modest amount of money, but in my head, I had already built big dreams. I told myself, just a few months, and I'll double or even triple this account. I'll live a life of freedom, no boss, no fixed schedule, just a laptop and a decent internet connection. In my imagination, I could see myself sitting in a fancy cafe, sipping espresso, watching my account numbers glowing green, while my friends were still struggling with their boring office jobs. The vision was so sweet that I believed it was only a matter of time before it became reality. I remember my very first trade vividly. It was a stock I knew almost nothing about, other than the fact that its price had surged the day before. My thought process was simple. If it went up yesterday, it will probably go up again today. With that logic, I pressed the buy button with a pounding heart. My hands were sweaty, my excitement was hard to contain, and within just a few minutes, the price ticked up slightly. A small profit flashed on the screen, only a few percent, but the feeling was indescribable. I felt like a genius, as if I had just discovered a money printing machine. I thought, if I can repeat this a few more times, I'll be rich in no time. But that excitement didn't last long. The very next day, the stock turned around and plummeted. The screen was bleeding red, my tiny profit evaporated instantly, and my initial capital was quickly eroded. I sat there frozen, staring at the screen, unable to believe what had just happened. I had imagined countless scenarios of victory, but never once did I think I could lose so fast and so painfully. That was the first time I truly felt the cruelty of the market. From that moment, I realized this isn't a game. The market is a massive battlefield. Millions of people are in it, each with their own goals, each wanting to win. And there I was, a rookie with no real experience, foolishly thinking that a bit of intelligence and luck was enough to outsmart veterans who had survived decades. Looking back now, it's almost laughable. I was like a fresh recruit stepping onto the battlefield with a gun I barely knew how to use, facing warriors who had been through hundreds of brutal fights. The market gave me my first lesson. It does not care who I am. It does not care how much money I put in, how big my dreams are, or how badly I want it. It only moves according to its own rhythm, cold and indifferent, completely detached from my hopes or fears. And the most dangerous part? If I didn't understand this, it would wipe me out before I even realized what happened. Do you remember your very first trade? Do you remember that pounding heartbeat as you clicked buy or sell? The rush of joy when you saw a small profit, followed immediately by the panic when the numbers turned red and kept getting worse? If you've been there, you know exactly what I'm talking about. And if you haven't, trust me, your day will come, and it will teach you a lesson you'll never forget. When I entered the market, I carried both greed and fear inside me. Greed because I thought money would come easily. Fear because every price swing felt like a threat to my survival. These two emotions clashed constantly, turning every decision into a gamble. I remember one trade where the price went against me. Instead of cutting the loss, I just sat there hoping it would reverse. But the longer I waited, the deeper it fell. A small loss grew into a huge one, and eventually, disaster. That is the classic mistake almost every beginner makes, refusing to accept small losses, only to suffer massive ones. After a few rounds of painful losses, I started to ask myself, what am I really doing here? Do I truly understand how the market works? The honest answer was no. I was simply gambling, like flipping a coin and praying it landed on my side. That wasn't investing. That wasn't professional trading. It was gambling disguised as trading. Yet, those painful failures slowly opened my eyes. I realized that the market isn't a place to satisfy short-term greed. It is a long game where only patience, discipline, and risk management will allow you to survive. I understood that if I kept relying on luck, I would be eliminated quickly. And I also realized something more important. In the beginning, it's not about how much you can make, it's about learning how not to get kicked out of the game. Looking back, I see that my first step into the market didn't bring me victory. It brought me wounds. But those wounds became my best teachers. They showed me that this path is not easy. It's not a lottery ticket, not a quick gamble. It is a battlefield. And in this battlefield, survival does not belong to the strongest, but to the most adaptable. So if you are just taking your first step today, let me tell you this. Don't worry about how much you'll make in the first week, the first month, or even the first year. The only thing you should focus on is not getting knocked out of the game. Treat your early losses as tuition, your bitter experiences as lessons, and each day you survive as a small victory. Because as long as you survive, you still have the chance to grow, to build a system, and to eventually become the kind of trader the market cannot defeat. So let me ask you, are you ready to see the market as a real battlefield where you must prepare everything just to survive, instead of seeing it as an easy place to make money? The invisible traps. When I survived my first few painful losses, I thought I had become wiser. I thought those early defeats were enough to make me stronger. But the truth was far more complicated. If the market is a battlefield, then it is not just bullets flying. It is also a minefield full of invisible traps waiting for naive rookies like me to step into them. And many times, I did. I paid for it with money, with confidence, and with sleepless nights that seemed endless. The irony is that these traps are not out there in the market. They are inside our own minds. The market itself is just a mirror. It reflects our greed, our fear, our impatience, and our arrogance. And if you are not careful, those very things will become the ropes that bind you, dragging you down when you think you are climbing up. I remember clearly the first trap I fell into, the trap of early wins. After a string of small losses in the beginning, I suddenly hit a streak of winning trades. My account grew quickly, and an intoxicating sense of confidence filled my chest. I told myself, I figured it out. I'm different from the crowd. I was born to be a successful trader. You can already guess what happened next. Within a week, I lost everything I had just made, and more. The market whispered in my ear, don't get cocky. Don't ever think you're smarter than me. The trap of early wins is dangerous because it feels sweet. It is like honey that lures you in, blinding you with the illusion of mastery. After a few wins, you think you have some special ability. You start increasing your position size, ignoring risk rules, brushing aside discipline. You convince yourself you're on a roll, that the market owes you another win. But in reality, you've become easy prey. I once went all in after several consecutive wins, and you already know the ending, a sudden reversal, and my entire account vanished in seconds. Then came another trap, the trap of revenge trading. This is perhaps the most common snare among traders. When you lose, instead of accepting it as part of the game, you dive back in with the burning urge to make it back right away. At that point, you're no longer trading your plan, you're trading your emotions. You click buy or sell recklessly, you double your size, you ignore setups, all because one thought screams in your head, I must recover now. But the market never shows mercy. It knows the exact moment you lose control, and it will punish you with another heavy blow. I've been there more times than I'd like to admit, and it's one of the most destructive feelings. Watching my account bleed, not because my system was broken, but because I couldn't control myself. That was the harshest truth. Another invisible snare is the trap of impatience. I don't know about you, but in my early days, I couldn't just sit there and watch the market without jumping in. I thought making money meant always being in a position. Waiting felt like wasting time. So I chased every move, took every signal, convinced myself that action was progress. The result? A trail of small, meaningless losses that piled up into something huge. Only much later did I realize that in trading, patience is not wasted time. It is a vital skill. But to learn that, I had to pay my tuition in full. And then there was another snare, one that is even more subtle and dangerous, the trap of comparison. I constantly looked at other traders and compared myself to them. I saw people flaunting accounts that doubled in a month. I saw screenshots of $1,000 profits made in a single session. And I asked myself, why can't I do that? Am I not good enough? That feeling drove me to overtrade, to take unnecessary risks, all just to prove I was just as good as them. But of course, the more I tried to prove it, the more I lost. Eventually, I realized the only person I should be comparing myself to is the trader I was yesterday. By now, you probably see the pattern. All of these traps come from human psychology. The market itself is neutral. It moves according to supply and demand. It has no agenda to hurt anyone. But our greed, our fear, our ego, and our impatience, those are the traps that destroy accounts. The market is a mirror, and when you stare into it, it shows you your true self. If you are weak, it exposes your weakness. If you are arrogant, it will humble you. If you are impatient, it will make you pay. It took me years, countless losses, and more than a few rock-bottom moments to finally grasp this truth. Honestly, no one can completely avoid these invisible traps. Even with experience, they are always lurking. The only difference is that with time, you recognize them faster, you control yourself better, and you stop them before they drag you too far. That is why I always tell people, in trading, the greatest victory is not beating the market, it is beating yourself. So let me ask you, which trap have you fallen into? The trap of early wins? The trap of revenge trading? The trap of impatience? Or the trap of comparison? Have you ever let emotions run your trades instead of your plan? If so, then congratulations, you are not alone. Every trader walks through these traps at some point. The only thing that matters is whether you learn something every time you stumble. For me, each invisible trap left a scar. But those scars became my armor. They remind me that I am just a small player facing the vast force of the market. They taught me humility, patience, and the understanding that trading is not a sprint, but a marathon. And above all, they taught me this. To become the kind of trader the market cannot defeat, I first had to learn how to recognize and overcome the traps within my own mind. The psychological game and the illusions of price. If in the previous part I shared with you the invisible traps, now I want to take you deeper into something even more dangerous, the psychological game and the illusions that price creates. You see, the market is not just numbers or candles painted red and green. It is a massive stage where every movement of price is a performance, and we traders are both the audience and the actors. The cruel part? The script is never revealed in advance. Over more than 20 years of trading, I have learned one truth. The market moves by crowd psychology, but every individual believes they are acting independently. That contradiction is what drives price up and down. When the crowd believes price will keep rising, they rush to buy. When they believe it will fall, they sell in panic. And price, being nothing more than the outcome of supply and demand, reflects that belief. But here is the catch. That belief is rarely rooted in logic. It is almost always driven by emotion. I remember one particular period very vividly. The stock market was booming, and headlines were everywhere. Newspapers ran daily stories about stocks doubling or tripling in just a few months. Friends who had never traded in their lives suddenly opened accounts, talking nonstop about the next big winner. They bought anything that was going up, and their accounts swelled in weeks. In that atmosphere, I too was tempted. I thought, if everyone is making money, why should I be left out? But that was when the market built its first illusion. The illusion that price can only move in one direction. When everything goes up, you believe it will keep going up. When everything goes down, you believe it will keep falling. It is human nature. We like to extend the present into the future. And that is exactly why so many people get trapped when the trend flips. I watched people become rich in a matter of months, only to lose everything in a matter of weeks. They couldn't see that behind the illusion, the market was preparing to reverse. There's a story I will never forget. A friend of mine nearly doubled his account during a bull run. He proudly told me he had found the Holy Grail. He said, just buy what's already rising, hold for a few weeks, and you'll always profit. I warned him the market is never that simple. He didn't listen. Then one day, the trend turned. Everything he had, his profits, his capital, vanished. I met him at a cafe afterward. His hand trembled as he held his cup, his eyes bloodshot, his spirit broken. That was the moment I saw clearly. Price illusions don't just rob your money, they crush your soul. Have you noticed that when price rises, you feel like you entered too late, and when price falls, you feel like you exited too late? That is another illusion, the illusion of regret. It makes you believe you could have done better, gotten in earlier, gotten out cleaner. But regret only appears after the fact. The market is always obvious in hindsight, but confusing in real time. And if you keep chasing that feeling of regret, you'll stay stuck in the endless loop of enter, lose, regret, repeat. Another illusion is more subtle, the illusion of control. Almost every trader falls for it. We think that if we study enough charts, indicators, and patterns, we can control the market. I believed it too. I spent countless nights drawing trend lines, calculating signals, mapping out scenarios. And every time, a voice inside told me, this time, I've got it right. But the price would move in a completely different direction. It would break my lines, invalidate my patterns, and shatter my illusion. The market always finds a way to remind you, you cannot control it. You can only control yourself. Looking back, I realized all these psychological games, from endless trend illusions to regret to the illusion of control, are tied to one core truth. The human mind desperately seeks certainty in a world of uncertainty. And it is that craving for certainty that becomes the trap. The market is never certain. It is a game of probabilities. And until you accept this, you will always be chasing shadows. I often tell beginners, the market is a psychological game, and price is simply the tool that reveals it. When you see a strong green candle, you're not just seeing price, you're seeing euphoria. When you see a massive red candle, you're watching fear take over. The key is not to get swept away by those emotions, but to stay calm when the crowd loses control. There's one principle I've engraved into my mind. When everyone believes in one direction, that's often when the illusion is at its peak. And when the illusion peaks, reality shows up, usually in the opposite direction. I've seen this play out dozens, even hundreds of times. From the dot-com bubble to the financial crisis to sudden crashes in crypto markets. History has proven over and over, the crowd is usually wrong at the turning points. So if you want to survive this game, you must learn to see the illusions others cannot. You must train yourself to view the market not just with your eyes, but with an understanding of human psychology. You must know when price is simply an illusion, when it reflects true value, and most importantly, where you stand in that cycle of emotion. Now, I know what you might be thinking. It's easy to say, but hard to do. And you're absolutely right. No trader is immune to market illusions. Even after 20 years, I still get caught at times. The only difference is that now I recognize it faster, stop myself sooner, and never let it drag me too far. So here is the truth I want you to take away. Price is not reality. It is just the story the crowd is telling itself. And if you are not careful, you will buy into that story and get trapped inside it. The market is, at its core, a psychological game. And the winners are not the smartest, but the ones who can control themselves the best. Building discipline, like a warrior of the market. There is a truth that took me nearly 10 years to truly understand. Discipline is the most powerful weapon a trader can possess. You may have a good system, you may even have an edge that has been backtested thousands of times. But without discipline, everything can collapse with just a few clicks of the mouse. The market does not need to be smarter than you. It only needs to be more patient than you. And if you do not have the discipline to protect yourself, the market will slowly wear you down until you are exhausted. I have witnessed too many heartbreaking scenes. Friends who started out with me, who were once full of excitement, eventually left the market with heavy debts and a bitterness they never wanted to speak of again. The common point among them was not a lack of intelligence or skill, but a lack of discipline. How did I learn discipline? In my early years, I thought discipline was just a minor detail. I was confident that I was smart enough and fast enough to escape bad situations. Reality taught me otherwise. I remember once setting a rule for myself. I would only risk a maximum of 2% of my account on a single trade. I wrote it on paper and taped it to my screen. But after a losing streak, I felt frustrated. I told myself, if I double the position size, I only need one win to recover everything. And you can guess what happened. That trade lost as well, and I lost far more than I had ever intended. That was the moment I realized discipline is not something you simply write down. It must become a survival reflex. Like a warrior stepping onto a battlefield, he cannot decide each day whether or not to wear his armor. He must treat his armor as part of his body, or he will eventually fall. That is exactly how discipline works for a trader. Why is discipline so difficult? Many people think it is because you need iron willpower. But in truth, discipline is hard because it goes against human nature. Humans are wired to avoid losses and seek rewards. It is a survival instinct. Avoid danger, pursue gain. In trading, this instinct becomes a deadly trap. When you are losing, you want to hold on, hoping the market will turn in your favor so you can avoid pain. When you are winning, you want to take profits quickly to lock in the reward. As a result, losses grow larger while profits shrink smaller. The only way to break this cycle is with unshakable discipline. You must set the rules of the game and force yourself to follow them, even when your heart is screaming to do the opposite. Where does discipline begin? After many years of trial and error, I discovered three foundations of discipline. The first is discipline in planning. Every trade must have a clear plan: entry point, stop loss, target, and position size. If a trade is missing any of these four elements, I do not enter. In the past, I often entered trades based only on a feeling, and nearly all of those ended in failure. The second is discipline in execution. This is the hardest part. It is easy to say you know where your stop loss is, but when the market hits it, do you have the discipline to close the trade immediately? It is easy to set a profit target, but when the price comes close and then pulls back, do you have the courage to stick to your plan? Discipline in execution is the real test of a trader. The third is discipline in journaling and review. At the end of each day, I write down my trades, not just the results, but also my emotions, my reasons for entering, and my reasons for exiting. This habit has saved me countless times. It showed me that most of my mistakes did not come from my system, but from failing to follow my own rules. Discipline is not a prison, it is freedom. That may sound contradictory, but it is the truth. Discipline is the path to freedom. When you have discipline, you are no longer controlled by emotions. You no longer stay up at night regretting a bad trade. You can shut down the screen, step outside, take a walk, and enjoy life without being chained to the price chart. I once lived like a prisoner of the market, checking my phone in the middle of the night just to see where price was. Only when I learned discipline did I finally feel that trading was a profession, not a prison. Let me ask you something. Have you ever set a stop loss, only to move it lower, telling yourself you just want to give price a little more room? And then watched your loss grow larger and larger? Have you ever taken profit too early, only to watch the price continue to run while you tortured yourself the rest of the day? If the answer is yes, then you are like me, like thousands of other traders. But the difference between those crushed by the market and those who survive as warriors is simple. Who learns discipline first? I often imagine myself as a samurai going into battle. A samurai does not swing his sword randomly. He trains the same movement thousands of times so that when the battle comes, he acts without hesitation. That is the essence of discipline. Practice a rule so many times that it becomes instinct. Trading is the same. If you want to become a warrior of the market, you must train discipline until the moment your finger clicks the mouse. It does not follow your emotions, but the rules you set long before. After more than 20 years, I have realized this final lesson about discipline. Winning big is not as important as surviving long enough to win. And the only path to survival is discipline. The market will always try to provoke you, sometimes with a winning streak that makes you arrogant, sometimes with a losing streak that makes you desperate to recover. But if you keep your discipline, you will move forward steadily, like a warrior who cannot be shaken. One day, you will look back and understand that the greatest profit you ever earned was not a number in your account, but the freedom and peace of mind that comes only to traders who embrace discipline. The art of risk management for survival. There is one thing I want to tell you right from the start. Risk management is not a choice. It is the condition for survival for every trader. You may ignore it for a day, a week, even a month. But eventually, the market will deliver a test, and if you do not have risk management in place, you will pay with your entire account. It took me many years to learn this simple lesson. When I first started, I was fascinated by the idea of big wins, of going all in on trades that could double an account in just a few days. I was drawn to stories about legendary traders who made millions from a single position. And I thought, if they can do it, why can't I? The reality was brutal. I tried. And like many dreamers before me, I paid with painful account blowups. After more than 20 years, I have come to one conclusion. Those who survive in the market are not the ones who win the most, but the ones who lose the least. That is the essence of risk management, the art of survival. Why is risk management so difficult? Let's be honest, nobody comes to trading just to manage risk. People come for money, for excitement, for the dream of getting rich quickly. That is exactly why most ignore the most important thing. Human nature is wired to focus on reward while minimizing the thought of loss. Everyone believes risk will not happen to them, until it does. I remember once, after a long winning streak, I began to believe I had figured out the market. I increased my position size 3 times, 4 times, convinced the streak would continue. But within a few days, all the profits I had built up over months were gone. I sat frozen in front of my screen, asking myself, why was I so stupid? The answer was simple. I had forgotten risk management. Risk management is not about maximizing profits. It is about maximizing survival. Many new traders misunderstand this. They think risk management slows down the path to wealth. In reality, without it, you will never get wealthy. Instead of asking, how do I make the most money? You should be asking, how do I stay in the game? Because only when you remain in the game do you even have the chance to win big. Over the years, I have built a set of principles that I treat as my armor in the market. First, never risk more than 2% of your account on a single trade. It sounds simple, but it is not easy to follow. When you strongly believe in a trade, you will want to put in more. But you must remind yourself, the market can be wrong, and you can be wrong. If you keep to the 2% rule, no single trade can ever destroy you. Second, always use a stop loss. No exceptions. I used to think I could sit at the screen and close trades manually, but all it takes is one sudden move, faster than you can react, to teach you that a stop loss is your only safety rope above the abyss. Third, accept losing as a part of the game. A warrior cannot step onto the battlefield thinking he will never get hit. Trading is no different. You will lose, many times. But if you know how to limit those losses, you will still stand tall and keep fighting. Fourth, always consider the worst-case scenario. Before entering a trade, I ask myself, if this goes against me, how much will I lose? Can I live with that? If the answer is no, I do not take the trade, no matter how good the setup looks. The price of ignoring risk is heavy. One of my most painful memories happened in my 5th year of trading. I had a brilliant winning streak. My account grew by over 70% in just a few months. I felt invincible. Then one day, I put nearly all my capital into a single position. That trade lost. Not only did I lose money, I also lost confidence, lost sleep, and even thought seriously about quitting altogether. That experience taught me that risk does not only drain your account, it can also destroy your spirit. And once your spirit is broken, returning to the market is nearly impossible. Risk management is not just about numbers, percentages, or formulas. For me, it is freedom. When you know that even if you lose, you still have enough capital to keep going. Fear disappears. You can trade with a clear mind without being haunted by every tick of price. There was a time when I applied strict risk management and went through a losing streak. Instead of panicking, I looked at the damage and saw that it was only a small fraction of my account. I still had enough capital and enough confidence to continue. The winning streak that followed not only recovered my losses, but also brought profits that far exceeded them. Without risk management, I would have blown up my account before ever reaching that stage. Let me ask you something. Have you ever won a few trades in a row, then suddenly became confident enough to multiply your position size, only to lose everything in a single day? Have you ever skipped a stop loss, thinking you could watch it closely, and ended up staring helplessly as your account drained away? If the answer is yes, then you understand exactly why I call risk management the art of survival. After 2 decades, I can say this with certainty. Trading is not a game of chasing profits. It is a game of managing risk. Profits only come to those who survive long enough to receive them. The art of risk management will not make you rich overnight, but it guarantees you will still be here, sitting in front of your screen years from now, while countless others have already been eliminated by the market. If discipline is your weapon, then risk management is your shield. And only when you carry both can you step onto this unforgiving battlefield with the confidence that you will survive, no matter how many brutal blows the market throws your way. Probability thinking, the key to long-term victory. After more than 20 years in the markets, I have realized something important. Most traders do not fail because they lack knowledge or tools. They fail because they lack the right mindset. And the single most important mindset in trading, the one that separates survivors from the eliminated, is probability thinking. When I first started, I thought every trade was a life or death battle. If I won, I was right. If I lost, I was wrong. I poured all my emotions into every trade, trembling when I clicked the buy button, heart racing as prices moved, and sinking into despair when the market turned against me. I viewed trading as a series of isolated events where each outcome determined my fate. And because of that, the market tore me apart again and again. It took years for me to finally understand that trading is not about one or two trades. It is a game of probability where each trade is just one event in a long series. If you focus on the outcome of every single trade, you will live in constant fear and anxiety. But if you learn to see the market through the lens of probability, you will discover true freedom. Think of a casino. You can win a hand or lose a hand, but the house does not care about any single result. They only care that the rules of the game give them a slight edge. With thousands, even millions of plays, that small edge turns into massive profits. That is how markets work, and that is exactly how a professional trader must think. I once met a young trader who won his first 3 trades in a row. He was ecstatic, convinced he had cracked the code. On his 4th trade, he bet nearly everything he had. The market turned against him, and he lost it all. When I asked why he risked so much, he told me, because I was right 3 times in a row. I thought I could not be wrong this time. That is the deadly mistake of those who do not understand probability. They mistake a short streak for long-term truth. Here is the reality. You can be right 5 times in a row and still lose everything on the 6th. You can be wrong many times, whoa, but a single big win at the right moment can cover it all. Probability thinking does not view outcomes in black and white. It only cares about long-term repeatability. To survive and win over the long run, I learned to accept randomness. I accepted that no one can know with certainty what will happen next. Technical analysis, indicators, patterns, they only increase probability slightly. They never eliminate uncertainty. Once I understood that, I no longer needed to be right on every trade. I just needed a system with positive expectancy, meaning that if I repeated it long enough, the end result would favor me. There was a time when I went through a losing streak of 12 trades in a row. 12. Can you imagine the doubt and fear I felt? I questioned myself, my system, and even whether I belonged in the markets at all. But then I looked back at my statistics. I knew this system had been tested over hundreds of trades with stable positive expectancy. So those 12 losers were simply part of the game. And sure enough, the wins eventually returned, and the overall results remained within the curve of expectation. Probability thinking gave me calmness. When you know any single trade can lose, you stop being desperate or obsessed. You place the trade, accept the predefined risk, and let the market do its work. The outcome of one trade does not matter. What matters is whether you are consistently playing a game with an edge. This is where most traders fail. They lack the patience to see enough iterations. They abandon their system after a few losses. They give up before the probabilities can play out. Impatience, not the market, eliminates them. I often tell my students, think like a statistician, not like a gambler. A gambler bets hoping to win immediately. A statistician looks across hundreds or thousands of repetitions and evaluates results by probability. Who survives in the long run? The one who thinks like a statistician. You might ask, how do I develop probability thinking? The answer lies in experience and discipline. You must track every trade, not just one or two, but hundreds. You must see with your own eyes that your system has a long-term edge, and you must have the discipline to stick with it, even when the losing streaks come. Trading is like flipping a weighted coin where the odds are slightly in your favor. You might lose a few tosses, but if you flip enough times, you will win. The question is, do you have enough capital, patience, and discipline to keep flipping? 2 decades in this profession have taught me one simple truth. Winners are not the ones who are always right. Winners are the ones who understand they do not need to be right to still win over the long term. That is the power of probability thinking. So let me ask you, are you treating trading as a life or death battle on every single trade, or as a long-term game of probability? If you are still letting emotions dominate each trade, you are chaining yourself to the cycle of fear and greed. But if you learn to see through the lens of probability, you will find calmness, resilience, and ultimately, true freedom. Humility before the market, lessons from 2 decades. In 2 decades of living with the markets, there is one lesson I want to pass on to anyone who sets foot on this path. Learn to be humble before the market. It sounds simple, but believe me, to truly live with that humility, you will pay with scars, both in your account and in your soul. When I first started, I was full of arrogance. I thought I was smart. I read books, I learned fast, and I believed I could conquer the market in no time. I looked at charts, drew a few trend lines, spotted some candle patterns, and told myself, I understand. I just have to follow this and I will win. That arrogance led me into mistake after mistake. The market has a very unique way of teaching. It does not lecture, it does not warn, it simply takes your money. Every time you are overconfident, every time you believe you have found the secret, the market slaps you with losses to remind you it does not belong to you, and it is beyond the control of anyone. I remember the first time I increased my position size tenfold after a winning streak. I thought I was invincible, and then in just 2 days, all the profits I had built over 3 months disappeared. I sat staring at the screen in disbelief. It felt like being dragged down to the ground after soaring into the sky. Painful, but necessary. That fall taught me that arrogance is the number one enemy of a trader. What does humility before the market mean? It means always admitting that you can be wrong. No matter how good your system is, no matter how many times you have tested it, there's always a chance the market will move against you. Humility is placing a stop loss even when you are certain about your analysis. Humility is never putting all your capital into a single trade, no matter how perfect the setup looks. Humility is staying out of the market when things are unclear, instead of forcing a trade just to prove yourself right. People often ask me, do you ever feel like you are smarter than the market? I laugh. The market is not an opponent you can beat. It does not win or lose. It simply exists. The only opponent you can defeat is yourself, your greed, your fear, and above all, your arrogance. One of the greatest lessons I have learned is this: the market will always be bigger than you. It can swallow your effort, your knowledge, and your capital in a heartbeat. The sooner you understand that, the sooner you will learn how to survive. I have seen young traders who were sharp, talented, and on hot winning streaks, only to be wiped out in one moment of overconfidence. It was not because they lacked skill, but because they lacked humility. Humility also means learning how to listen, not to the news, not to other people's opinions, but to the market itself. Price, volume, the chart, they are speaking to you. The question is whether you are calm enough to hear them. Arrogance covers your ears. Humility opens them. I often compare trading to sailing on the sea. You may be a skilled sailor, know how to read the stars, use the compass, and manage the sails. But the waves and currents will never be under your control. Your job is to be humble before the sea, adjusting your course with the current, not commanding it. Over 20 years, I noticed something interesting. When I was humble, disciplined, and patient, the market often rewarded me. But when I was impatient, arrogant, and eager to prove myself, the market always took back more than I gave. The market was not punishing me because it hated me. It was simply reflecting my own pride back at me. Ask yourself, how many times have you increased your trade size because you thought, this one is certain? How many times have you held on to a losing position just because you refused to admit you were wrong? How many times have you lost more than necessary because your ego could not let go? If the answer is as many times, then congratulations, you have already begun to touch the lesson of humility, though through pain. I am not saying humility will protect you from all losses. No, Losses are inevitable, but humility will protect you from catastrophic mistakes, the kind that erase years of effort in a single blow. It is like bowing your head to dodge a punch instead of standing proud and breaking your jaw. Humility before the market also means being grateful for the lessons it delivers. Each loss is not humiliation, but a reminder. Each fall is not there to kill you, but to help you grow. I have learned to see the market as a strict teacher. And like any true teacher, it rarely praises. It constantly tests you to make you stronger. After 2 decades, I can say this with certainty. You do not need to prove you are smarter than the market. You only need to prove that you are humble enough to survive in it. Because in this game, winners are not the ones who are always right, but the ones who always remain. True freedom, when trading is no longer a battle. After 20 years of experience in the markets, I have realized that the ultimate goal of a trader is not to win every trade or to become unbeatable. The ultimate goal is true freedom. Freedom in trading is not about how much money you make, but about no longer being controlled by fear, no longer being driven by emotions, and knowing how to survive long term in the market. When I first started, trading felt like a constant battle. Every trade was a fight. Every day was a mental struggle. I lived in a state of continuous tension, afraid of being beaten by the market, anxious with every price move. Each victory brought only short-lived joy, and every loss sent me into panic. I thought this was the nature of the job, that every trader had to fight continuously just to survive. But over the years, I learned that how you approach the market determines your freedom. When you enter trading in a constant battle mindset, you are actually fighting yourself, your emotions, and your ego. And that battle never ends. You may win a few rounds, but pressure, fear, and greed will always follow. True freedom in trading comes when you detach yourself from the emotions of each trade, when you see the market as a long-term probability game, and when you consistently follow discipline, risk management, and humility in learning. At that point, each trade is no longer a life or death struggle. It becomes part of a system, a step in a long journey. Imagine walking on a long road. Each step you take is not to prove you are faster or stronger than anyone, but to maintain a steady pace, avoid falling, and keep moving toward the destination. Trading is the same. When you maintain calm, follow discipline, manage risk, and accept probability, you achieve freedom before the market. I want to share a story. Many years ago, I went through a losing streak that lasted several weeks. I felt immense pressure. Every second was anxiety. But instead of panicking, I calmly reviewed every trade, analyzed why I had lost, and stuck to my principles. Never risking more than 2% per trade, always using stop losses, never forcing a trade to prove myself. In the end, the losing streak passed, and the system worked again. I realized that if I hadn't followed my rules, I would have been eliminated. But by sticking to them, I was no longer controlled by pressure. That was the feeling of true freedom. Freedom does not mean lack of responsibility. On the contrary, freedom comes when you take responsibility for every decision, understand your risk limits, and control your emotions instead of letting them control you. A free trader does not fight the market. They move alongside it, flow with it, and seize opportunities when they appear. One of the most important aspects of freedom is no longer being ruled by ego. When I started, I wanted to prove myself right, to win every trade to demonstrate my ability. The market taught me that ego not only costs money, it also steals freedom. When you no longer care about proving yourself, when you focus on following your system, controlling risk, and learning from the market, you truly escape psychological pressure. Freedom also comes from understanding and accepting probability. You no longer stress over each trade because you understand that your system has a long-term edge. You no longer lose sleep over sudden price swings because any loss is limited. When you accept that trading is a probability game, every price movement is no longer the enemy, it is part of the game. Finally, true freedom in trading is finding joy in the process, not just the results. When you are no longer obsessed with winning or losing each trade, you can enjoy analyzing charts, observing patterns, and the sense of control over yourself in the face of challenges. You feel mastery, not dragged around by the market, and can make decisions with absolute calm. I want to ask you, are you trading to fight or are you trading to be free? Are your emotions controlling every price movement, or are you moving with the market with calm and discipline? If your answer is fighting, remember that battle never ends. If your answer is freedom, continue practicing discipline, risk management, humility, and probability thinking. Those are the steps that will lead you to true freedom. After 20 years, I can say this with certainty. The trader who is free is not the one who always wins, but the one who survives, stays calm, and remains composed through every challenge. When you achieve that, trading is no longer a battle. It becomes a journey where you control yourself, enjoy the process, and move steadily toward your long-term goals. And that, ultimately, is the destination for every trader. True freedom in trading, where you no longer fight the market, but live alongside it calmly, intelligently, and with mastery. Wishing all traders discipline, smart risk management, and the probability mindset to achieve long-term success. Remember, the market is not here to defeat you. It is here to teach, to challenge, and to help you become the best version of yourself. If you want to continue learning, improve your skills, and discover the mindset secrets of successful traders, subscribe to Trading Mindset Lab today. Hit the subscribe button and turn on notifications so you never miss valuable videos that help you grow, stay disciplined, and succeed sustainably in the markets. Let's turn the market into a place for learning, growth, and long-term mastery together.